All right, fam. Good afternoon. I hope y'all have had an awesome week. Happy Valentine's Day to each and every one of you. Excited to be here with you today to talk about three uh, important lessons I have learned in trading. Of course, there's many, many, many lessons, right? That I've learned over the years in trading, but for time's sake, I decided to pick the top three that I think have been most valuable to me in my trading career. And so let's get started with the first one, and that is this. I think it is very important in trading to find a strategy that resonates with you. There are many different types of trading. You have dip buying, you have momentum trading, exhaustion trading, uh, day trading, swing trading, leap trading, trading options, trading futures, trading equities, so many choices. And then each one of those has different strategies, right? That you can trade different indicators, both free and those that we pay for. And what I learned over the years was to pick a strategy that most resonates with me and my way of thinking, as well as trading, just the psychology around trading and what works best for the way that I think. And for me, about 2.5 years ago, I discovered Trendy John and learned everything I could possibly learn about supply and demand trading from him. Now, don't get me wrong, I never think that I have arrived and know everything. I believe every day we should strive to grow both as individuals as well as in our trading careers. So I'm always learning, perfecting, getting better, and such. But the strategy that I found 2.5 years ago, supply and demand trading, has allowed me to double my small account 7 times over that 2.5 years. And yeah, I enjoy it because supply and demand, everything in the monetary world revolves around supply and demand. And it took me a while to even hear about supply and demand trading, but once I did, I was like, yeah, that just makes sense. Why not trade, go long from demand and sell in supply? It just made sense. So once you find that strategy that really resonates with you, then my what I learned is that it is absolutely vital to block out everything else that is not the strategy that you're choosing to focus on. The reason being is because if you try to trade supply and demand, for instance, but then you want to throw in some momentum trading in there. Those are conflicting in that a momentum trade is typically you're buying a breakout above a level, whether it's a new all time high or just, price has been consolidating. You want to buy that breakout level, and oftentimes we see that during that it is in supply. So that would conflict with what I have learned in trading supply and demand, which is that you buy in demand and you sell in supply. So, trying to mix different strategies. When I was a new trader, I did that a lot, and it was very conflicting in my head. It caused a lot of confusion, and I just didn't have as much success as what I did when I focused solely on supply and demand trading. And like Mark Douglas says, you need to have a set number of trades, a set number of days, something like that, that you truly just trade that one strategy and journal those trades and see if it is something that you are finding success with. You can't take a couple of trades and they end up being losers, and you're like, that don't work. Not going to do that anymore. You need a good sample size. So I would suggest at least 30 trades or 30 days, and then look at your success rate. Look at your P&L, look at your win-loss percentage, etc., and see if that is a strategy that works for you. All right. The second very, very important lesson. Oh, that's a great question, Donald. Donald asks, what data do you record in your journal? So I journal every trade I take, and I then review that journal at the end of each week, and I make note of any important things or habits or mistakes or whatever that I see across the board. I make note of that, put a sticky on my computer to remind myself not to do that again, right? But what I journal in my trade, first off, of course, obviously, is the name of this symbol. I also journal the trend that that symbol is in according to the time frame that I was trading it. So is it in a bullish trend or a bearish trend or a simple neutral trend? Then I journal the expected duration that I'm going to be in the trade. So is it a day trade, a scalp trade, a swing trade, a leap trade, etc. I need all of that information because a month or two down the road, I might not remember all of those details related to that trade. Then I put in my journal what got me into the trade. What was my entry signal? Was it, so I'm speaking from trendy trading strategies, supply and demand, but did I get in the trade because of the PMZ or the EMA cloud or trendy edges, or I got in because it was in a demand zone, etc. Then I journal what my trade plan is for the trade. Now, this is important because that's my second most valuable lesson that I believe I've learned in my trading career is to have a very specific trading plan for every trade that I take, and that plan needs to be done in advance. That means you got to do some homework, okay? It's important that you have a trade plan and that you have developed that trade plan before price gets to your level. So, for instance, if you're looking at my screen, I have GLD pulled up right here, and GLD is very bullish. I mean, there's just no other way to cut that. It's very bullish across all time frames, and I want another entry. I've traded this several times, day trading and swing trading, all winners, and so I want another entry. So I have my trade plan displayed right here on the screen. I also already have my bid in for this trade. So I'm trading out of a 4-hour demand zone right here. I've got an alert set at the EMA cloud and a trendy edge, but I'm going to start the position at 264.80. Then I want to add to the position. So I'm scaling in at 263.46, and then I have my stop down here at 261.35, and that would be a daily candle close below that level because I commit to candle closes before being stopped out. So this is my entry plan. Now let's talk about my exit plan. I know where I want to trim at, 266.81. I know my second trim level is 269.70 to 271.51. And then above there, I would draw extension targets because this is all-time high. Okay. So I have my entry plan. I have my exit plan. I know where my stop is. And then I need to consider what strike I'm buying, and I'm typically buying right at the money. So the 265 strikes is what I'm buying. And then the amount of time that I need for expiration. And in this case, because I'm looking for a $5 to $10 move. I know that on a weekly ATR, this stock moves about $6 to $7 a week. So I need a couple of weeks to get up to a potential third target. So then I'm going to choose a February 28th expiration. That equals my trade plan. It is in place before price ever reaches where I'm going to start that position. And the reason why doing your homework ahead of time and knowing where your level's at, whether you trade supply and demand or not, whichever strategy you're trading, they should have an entry level as well as when you're wrong, right? A stop level and also targets. So it doesn't matter if you're trading supply or demand or not, you need to have your plan according to the strategy that you're trading and then know what that plan is ahead of time. Do your homework after the market's closed, look at your charts, look at what you're interested in trading, and then set you some alerts or put some bids in to at where you want to enter so that it's already there ahead of time. Now, going back to my journal, because my trade plan is something that I journal. Then the next thing I journal about is my emotions, what emotions I'm feeling around the trade when I get in it. Your emotions are such an important part of your success as a trader. So that day, maybe I've had a rough day and I'm feeling down or sad or fearful or what have you. There's a lot of emotions you can feel. Or maybe, you've made so much money in the last week or two, you're like feeling invincible or you're feeling exuberant about the market or what have you. I journal the emotions that I'm feeling at the time of sorry, of getting in the trade. All right? Then the next thing, and this is during the trade or after the trade, I journal what went right with the trade, what went wrong with the trade, any mistakes I made as far as not following my plan or use falling victim to FOMO and getting in the trade early or falling victim to fear and not adding to a trade that I had plans to add to, all of those things. What went right, what went wrong. And again, then I look over my journals at the end of each week and put little sticky notes of anything that really out. stands out. All right. All right. So the first valuable lesson that I've learned in trading, just as a review, is to find a strategy that works for you, that resonates with you. Stick to that strategy, blocking out all of the other noise, all of the other strategies. Don't try to combine two completely different strategies into one trade, okay? Because I did that and it didn't work. So, and then stick to that trading strategy for a minimum of 30 trades or 30 days, and then assess by looking at your journals and decide if that is going to be a successful strategy for you to trade in your trading career. That's the first most valuable lesson I learned. The second is to have a trade plan. Do my homework at the end of each day, at the end of each week, at the end of each month, depending on the length of time of the trade. So for my day trades, I have day trading plans and I re-chart those, reevaluate those every single day. Then I have swing trading plans that I evaluate, narrowing down my focus of what trades I'm going to focus on for the next upcoming week. I do that once a week. And then I also have leap trades, right? Longer term, buying at least a year if I'm trading options, or if I'm trading equity, I could be in the trade for 5 years, 10 years, who knows, years, forever until I pass away. But those types of plans, I go over, I review, I assess, I look for new setups, and I do that once a month. All right. So those are two very, very valuable lessons that I've learned that over the years of trading that have helped me to become a successful trader. And then the third, and probably, in my opinion, the most important part of becoming a successful trader is you, your mind, and your emotions. Learning how to approach each trade with a clean slate. Learning how to control your emotions related to your money, whether gaining money or losing money. In trading, you're going to have both. And pulling emotions from your last trade into your next trade is detrimental. Okay. And it could be good emotions or bad emotions, doesn't matter. Both are not helpful. What is helpful is looking at each and every trade that you put on as with a clean slate. With a trade is just a trade, right? It's either going to make you money or you're going to lose money. Knowing what your account balance is, knowing the amount that you're allocating to that trade, and making sure that that amount is an amount that you're comfortable with going to zero, becoming a complete loss, is super vital in being able to control the emotions around either winning or losing. All right. And if you feel yourself becoming day in and day out super fearful to put on trades, right? Because maybe you had a couple of losing trades in a row, I would encourage you to meditate, to do some yoga, anything that will relax your mind and your body. Listen to some Mark Douglas. Read Mark Douglas books or listen to him on audio book or whatever. He is or was the master of trading psychology. There is not a month that goes by since I have been trading that I haven't listened to an audiobook from Mark Douglas or a YouTube video of Mark Douglas just to it's like exercise for my trading emotions. It's the only way I can describe it. So if you find yourself because you've had some losers in a row, and every person, if they are completely honest with themselves and others, goes through that fear emotion in trading. Okay? It is not just you. It is not just me. Even the very, very, very best trader that you know, if they're completely honest with you, will tell you that they feel those emotions also. So find things, take a walk, take a jog, meditate, do yoga, listen to some audiobooks on trading psychology. Heck, even listen to positive self talk audio recordings. Write notes to yourself that are positive. Anything that is going to help you get over that fear emotion, do it. All right. Vice versa. If I start feeling super exuberant or like my ego gets too big for my britches, and I'm like, golly, every trade I've taken this month has been a winner. I'm just rolling here. I can't, whatever. Whatever that exuberant feeling feels to you, because often as traders, when we have multiple wins in a row, we'll start feeling invincible. All right. When you start to feel like that, go back to your journals and look at the time that you were struggling. It'll bring you back down to earth, right? Those two emotions, you might think that the worst one is the fear one, but in my opinion and in my experience, the worst one is actually the invincible, the super overconfident, the exuberant emotion has actually been more detrimental to my P&L than the fear one. Another thing that you can do if you're feeling the fear emotion or the exuberance emotion is to use automatic orders. So if you're feeling a fear emotion, now I use these all the time. So it's not because I'm fearful of getting in gold again, and it's definitely not that. Maybe the opposite for a gold trade, but I have a bid in here. So look, gold is down $3.88 today. That can drive quite the fear of, oh gosh, you want to go long gold, but I mean, it could fall all the way back and fill this gap down here at 255, right? It could. Absolutely. 100% that could happen. All right. So you might be fearful. Well, if you have a plan and you're good with your plan, you spent the time to come up with this plan. Um, it's a shame if you don't execute your plan, because there is nothing worse than having a plan, watching price come to your entry, but you were scared, so you don't get in. And then you watch price go to your target, and then that's not a good feeling and not one that I wanna have. So, if you find yourself feeling super fearful, make sure you have those bids in to go ahead and buy the contracts right where you intend. There's my bid. There's where I wanna get in. It's already there. It's gonna automatically execute for me, so I don't have to worry, am I gonna be fearful at that time? All right. Also, have your cells in because guess what? This is my plan, right? This is my plan. Once my buy executes, I immediately go and put in a cell at my trim level immediately. That way, if gold turns around and it gets to my level and I'm like, "Oh, yeah, but look how bullish it is. I'm not gonna trim there. Forget that. I'm gonna wait." And then price turns back down. Ugh, that is allowing a winner to turn into a loser, and that's not fun either. So, I will have my bid set to automatically trim here, and that keeps the emotions out of my trading. And that, in my opinion, is probably the most important lesson that I've learned in my trading journey is how to get the trading psychology right. A trade is just a trade. Never have more money at risk in this market than what you're comfortable with. Do not put yourself in a position that you could take your account to zero or take your account to 50% loss or what have you. Whatever that amount is for you, never put yourself in that sort of position by over allocating, right? And then a trade is a trade. If you got your allocation right, you've done your homework, you got your plan in place, you got your emotions in check, take the trade. It either works or it doesn't work. Wipe the slate clean regardless of the outcome and be ready for the next trade. All right? I hope that helps someone because it is something that is so, so very important to me to trade with good emotions, trade with a plan, and then have the discipline to execute that plan. All of that, once you find the trading strategy that resonates best with you and you stick to it, blocking out all of the noise, and then assess if it is truly successful for you. Because supply and demand might be successful for me, but it's not successful for you because we're not the same people. All right? All right, guys. If I got a couple of minutes, I can take a couple quick questions. If anybody has any questions about what I just talked about, you can put them in the chat and I'll answer them. Option Trader asked if I can share a copy of the template of my journal. Option Trader, I'm not sure if you're in the trendy room here at Simpler, but that's in our notes section. I don't have the link directly to it, um, but I can look at getting that for you later. But if you're in the trendy room, it's in the notes section. All right. All right, guys, I don't see any questions. So I encourage you to have that plan, stick to that plan, control your emotions. A trade is just a trade. And every single day, wake up with a clean slate, positive self talk, and let's continue getting better and better day after day. Y'all have a great weekend. It is a long weekend. The markets are closed on Monday, so we will not be here on Monday, but I look forward to seeing you again on Tuesday. Y'all have an awesome weekend. Happy Valentine's Day again. Much love, fam.